We have a few minutes now to sort of discuss the storage outlook that VTTI may have for the year ahead. Just a quick note to get from you first on how your company managed last year. Obviously an exceptional year, but arguably a good one overall for storage with the backwardation. With the contango that we saw for the majority of the year, but that obviously began to dissipate and switched to a backwardated market as we saw the year end, and now you're looking forward to perhaps more emphasis on that. So just tell us just briefly how the company fared last year, how you coped, and your outlook going forward now with this backwardation in the market, and how you see the company strategizing around that.
Yeah, so thank you, Diana. It's good to note that because everybody always talks about contango being good for terminal companies. It's only good if you have contracts that need to be renewed. If your contracts are there, then there is not a lot of benefit that you can gain from that. We were in a very fortunate position that already in March, April, that we had quite a few contracts coming up for renewal. And yes, as per expectation almost then, we have been able to benefit from the contango structure because we could indeed extend contracts, renew contracts at better rates. But even in hindsight, we're now in January 21, looking back over the year, we haven't seen a dramatic change in flow, the throughputs. They still kept kind of roughly the same as 2019. Yes, we have seen a lot of stock building through our sites globally. And we see quite a bit of destocking as we speak now, also in line with the earlier speakers on the backwardation. But so we have had a good year. Throughputs were okay, but we haven't had excess throughputs like you typically see as the cream on the cake in our industry. You do your normal throughputs, and if you get a little bit extra at the end of the year, that gives you a bit more revenues. We haven't seen that worldwide. And that was also as expected because that is the backdrop of a contango that people just don't move the products that much. If you look,
still looking at 2020. Of course, at the beginning of last year, the focus was all on the IMO new directive to drop the sulfur cap, obviously, in bunker fuel, and that was, by all intents, a successful start, but faded into the background perhaps as everything else took over on the news last year. But how did the market cope with that in terms of blending, etc., and the opportunities there, given what COVID and the pandemic brought on demand and the structure of the market?
Yes, indeed. Pre-COVID, everybody was, let's say, everybody was talking about IMO. That was the central theme. We haven't heard a lot about it, but there was a lot of expectation that marine gas oil would be coming in quite heavily. We haven't seen that, and we were betting our horses on the horse of the IMO. So we needed to do the very low sulfur fuel oil. So we have done quite a big adjustments in terms of infrastructure in our terminals, obviously in the Rotterdam area, in Fujairah, and in the Singapore region. And if you see, I have the numbers in front of me because I would forget otherwise, is that you see in Rotterdam around 50% of the bunker fuels were low sulfur fuel oil and not marine gas oil. So, and we have seen the same in Panama and Singapore, for example, that was 70 to 75%. So I think that has been a trend that was supported by the infrastructure that you needed to have in play. For storage companies, that gives a fantastic opportunity because blending means more components means more capacity, more infrastructure, and more services. So in a way, if this continues for the next few years, we need to see how it all moves with the scrubbers installation as well on the vessels. But if this continues, it's a nice add-on for terminals. Also, not only blending from an IMO perspective, I think one of the things that we see in different parts of the world, less so still in the Middle East, but certainly in Europe, is biofuels. And I think that's a next step that we are looking forward to also in other parts of the world to expand in. That gives great opportunities for terminals to firstly carve out niche sectors in your infrastructure to host the biofuels, but also gives fantastic blending opportunities going forward.
Yeah, and I mean, you mentioned the whole idea of increasing capacity, changing the different facilities that companies like you would do in the long run. That's obviously not a short-term possibility, that's long-term planning. But in terms of the flexibility short-term for companies like yours to take advantage of, or to continue to be able to add value and take, look at the opportunities that the market structure is offering. Looking forward to 2021, let's assume this backwardation continues. Where does that put you as a company in terms of where you put your focus on various blended products, and will you be caught off guard, or are you prepared?
Well, I would not say I would be caught off guard, because my shareholders are also listening. But no, we are obviously prepared. And firstly, I think it's good to note we never built infrastructure for the structure of the market. We never built a terminal for contango, because then you lose out the most part of the year. And we build our terminals because there's a functional need for blending, for imports, for break bulk, make bulk. And therefore, we haven't seen any massive impact. Also in the past, when there was after the super contango, we got into the backwardation on our business results. Mostly our business results are impacted if you see in certain regions overbuilt and there is a pricing pressure, but not necessarily in flow. But to your point on looking forward, I do believe, and that's something that we all need to look at, we need to make that turn into a more sustainable business. So we would be looking also to move more into LNG as a transition fuel. We are confirmed in a few projects there. We will be putting more focus on biofuels, as I mentioned a little earlier. And we're going to tip our toe into the pool of hydrogen. Not massively yet, but we need to understand what it does for the industry, what it does for the infrastructure companies like us. And lastly, we have, with the support of our shareholders, and also in view of the China theme, we have been able in COVID times to close a deal in China in 2020, right, where we are going to invest also now more into chemicals. So I think the diversification outside of hydrocarbons is kind of what we are aspired to do, in addition to the let's say, continue to invest in oil storage where there is a functional need. So never, ever only on the basis of a future market structure.
And I mean, you mentioned LNG. There has been a lot of talk about that as a potential bunker fuel. Obviously, it's there. It's on paper. It's doable. But there's also been arguments against the safety of that, functionally at ports, and the sort of the commercial viability of it as well. Do you think that will take off any time in the next sort of year or two, or is that still sort of long term, along with the hydrogen solution and other modes of fuel?
Well, tough for me to gauge. The projects that we are involved in are less on bunker fuels from LNG, but more to serve the energy needs in countries. We have been doing studies in Fujairah in the past, and also in Europe for bunker fuels. But like you say, the time was not right to do it at the time, and we are not involved in any bunker LNG project as we speak.
And what about the floating storage outlook for the year ahead? That must have dissipated probably a bit last year, but where does that stand today?
Well, we know that there was quite a bit of, and whenever there's stock building, you get floating storage up. I think, and it has been specifically in crude and also in middle distillates. We have seen that coming down quite a bit. I think the number that I got back is that it is now about 40 million barrels floating storage, which was about 100 million barrels before. And that is probably normal. We always have seen some floating storage. I think floating storage is never a real competitor to when you look at flexible terminals, because you can't do blending as good as you want, and it has limitations. And from my perspective, and that's more a message to ports around the world, you don't want offshore, let's say, a lot of manipulations being done on products. You want to do that in a secured environment, in a safe environment, in the terminal on land.
Rob, just one more question. You mentioned your acquisition in China that you made earlier this year, I believe in May, and that is a sort of a chemicals-focused acquisition, and that certainly, from the refining sector, is certainly looking to become more integrated on that front as well. A lot of refiners are thinking that is the way forward. They can't just rely on other fuels. They have to invest more in the petchem side of the business and integrate. What else is on your horizon in terms of acquisitions? I mean, in terms of geography, you're across 5 continents already. It's a first acquisition in China. Is that a trend you plan to continue? Do you need more capacity to add to your storage?
Well, so the move into China has been a very deliberate strategy to start, and this is kind of our first terminal into China. And with this, we start to roll out a more bigger ambition to grow into chemicals. We have no aspiration to go into oil. That is, for us, it's too complicated, we're too small to do that in China. But yes, we have, with the support of ADNOC and Vitol and RVM, we've now decided to move into chemicals in parts of the world, very specific parts, Southeast Asia, China, and Europe. And we have also embarked on making sure that we are going to get the first projects completed into LNG. But China, Southeast Asia, and the Middle East for us are still very much growth areas for the future.
Rob Nijst, thank you very much, CEO of VTTI. Thank you.